Jessica Simpson just lost $200 million. The no-prenup mistake that ruined her. Jessica Simpson, the name itself is a multi-million-dollar brand. She's the pop star who became a reality TV legend, then flipped the script and became one of the most successful fashion moguls in American history. She built an empire from the ground up, a company whose annual sales didn't just hit millions, they soared past $1 billion. Her reward? A personal fortune of $200 million, built on smarts and sheer grit. But what if one personal decision could make it all vanish? What if a single missing document could bring that entire empire crashing down, creating a financial disaster of epic proportions? This isn't just another celebrity divorce story. It's a cautionary tale about what happens when love, business, and hundreds of millions of dollars collide without a safety net. We're about to break down the hypothetical, but very real, financial apocalypse that would unfold if Jessica Simpson were to divorce her husband, Eric Johnson, without a prenup. How could the same woman who masterfully bought her own name back for $65 million make a $200 million mistake that could cost her everything? Let's unravel the no-prenup nightmare that could theoretically ruin Jessica Simpson. Jessica Simpson just made the most expensive mistake of her life. A mistake that has nothing to do with a bad investment or a failed product line, but everything to do with a simple missing piece of paper. In a world where she and her husband of over a decade split up, her entire $200 million fortune is on the chopping block. Why? The devastating financial fallout of not having a prenuptial agreement. This is the step-by-step breakdown of how one of America's sharpest entrepreneurs could watch her life's work get torn apart, all because of one of the most common and destructive missteps in any marriage: the empire building the billion-dollar brand. To really get the stakes here, you have to understand the sheer scale of what Jessica Simpson built. This was never a celebrity side hustle or some vanity project. The Jessica Simpson collection was a retail giant. It all kicked off in 2005. Riding the massive wave from her reality show Newlyweds and her role as Daisy Duke, Simpson was everywhere. But instead of just cashing in on easy endorsements, she did something way smarter. She partnered with Vince Camuto, the legendary founder of Nine West, to launch a shoe line. The goal wasn't high fashion, it was style for everyone. Simpson had an almost psychic connection with her audience, American women who wanted to feel great without a crazy price tag. She famously said she only wanted to make things she'd actually wear and that authenticity was gold. And wow, did it work. That first shoe deal was a smash hit and blew the doors wide open. Soon the Jessica Simpson collection was everywhere: clothing, handbags, perfumes, sunglasses, and even home goods. At its peak, the brand had over 30 different product lines in department stores like Macy's and Dillard's all over the country. The numbers are just wild. By 2014, the brand crossed a mythical threshold for a celebrity-fronted company: $1 billion in annual retail sales. To put that in perspective, her brand was reportedly out-earning powerhouse names like Michael Kors. Publications that used to gossip about her love life were now calling her the billion-dollar celebrity. But as every entrepreneur knows, massive revenue isn't the same as personal wealth. For years, Simpson was a licensor of her own name. She earned a hefty percentage for sure, reportedly around $13 million the year the brand hit $1 billion in sales, but she didn't own the whole ship. Then in 2015, the brand's majority stake was sold to a larger company, Sequential Brands Group. It seemed like a smart move at the time, but then disaster. Sequential's business crumbled, and in 2021 it filed for bankruptcy. Suddenly, Jessica's name, her legacy, the brand she'd poured 15 years of her life into, was about to be auctioned off. This is where her true business savvy kicked in. In a move that stunned the industry, she decided to buy it back herself. She fought like hell, later revealing she drained her own bank accounts and put everything she had on the line. In 2021, a bankruptcy judge approved the deal, and for $65 million, Jessica Simpson regained 100% ownership of her brand. It was a massive triumph. She and her mother owned all of it. She was back in control with a personal net worth estimated at a cool $200 million. And it's this hard-won empire that's at the center of our hypothetical storm: the hypothetical split and the prenup problem. Now for the drama: a hypothetical divorce. Jessica married former NFL player Eric Johnson in 2014. By all accounts, they've built a wonderful life and have 3 beautiful kids. But for the sake of this financial what-if, let's imagine that after more than a decade together, they decide to split. This is where a single document, or the lack of one, changes everything: the prenuptial agreement. A prenup is just a contract that lets a couple decide ahead of time how their assets will be divided if they divorce. It's a way to protect a business, family money, or wealth you had before getting married. In real life, Jessica learned this lesson the hard way. Her first marriage to Nick Lachey ended without a prenup, a mistake she later said cost her millions. She was young and, in her words, so offended by the idea. Having been burned once, reports say she was adamant about getting a prenup with Eric Johnson. But for our story, let's imagine she made that same mistake twice. What if they skipped the prenup, believing this time was different? If that happened, their divorce wouldn't be guided by their own rules. It would be governed by the laws of the state of California. And this is where the nightmare starts. California is a community property state. The rule sounds simple: pretty much any money, asset, or even debt acquired by either person during the marriage belongs equally to both of them. It doesn't matter whose name is on the deed or the bank account. If it was earned or built between the I do and the day they separated, the law sees it as 50-50 property. You might be thinking, but she started the company in 2005, years before she married Eric, so it's hers, right? Not exactly. And this is the killer detail that so many people miss. Under California law, it's not just about what you owned before the wedding, it's about the increase in value of that asset during the marriage. Any growth, profit, or appreciation in her business from 2014 onward could be argued to be community property. The logic is that the marriage itself, the partnership, the stable home life helped that business grow. Think about the major business moves that happened during her marriage to Eric. She saw her brand hit $1 billion in sales, sold a majority stake, watched the parent company go bankrupt, and then, most importantly, used her own funds to buy back 100% of her company in 2021. Since then, she's relaunched it and entered new partnerships to keep it growing. Without a prenup drawing a clean line, a court would have to pick apart this tangled financial web. Eric's lawyers would argue that the massive value she reclaimed and rebuilt was a product of the marriage. They would demand a full valuation of the Jessica Simpson collection, and then argue he's legally owed half of its growth since 2014. And just like that, a $200 million fortune gets put on the chopping block. The financial unraveling, a step-by-step collapse. So how would this actually go down? The second divorce papers are filed without a prenup. A financial time bomb starts ticking. It's a slow, painful, and wildly expensive process. Step 1, the discovery onslaught. First comes discovery. This is where the gloves come off. Lawyers from both sides demand every financial document you can imagine: years of bank statements, corporate tax returns, profit and loss sheets, internal emails, everything. Jessica's entire company would be put under a microscope. Her husband's legal team would crawl through every decision and every expense, looking for ammo to stake their claim. It's an invasive, exhausting process that yanks a CEO's focus from running the business to drowning in a legal swamp. Step 2, the battle of the valuations. This is the main event. Before you can split the business's value, you have to agree on what it's worth. Good luck with that. Each side hires their own team of forensic accountants to come up with a number. They'll look at assets, compare it to similar companies, and most importantly, project its future earnings. This is where it gets really ugly. What's the Jessica Simpson name itself worth? That's called goodwill, and it's notoriously hard to price. One expert might say the brand's future is solid, valuing it at $150 million. The other side's expert could argue its success is tied to her fleeting fame and value it at a much lower $50 million. These battles over competing numbers can take years and burn through millions in legal fees. Step 3, the impossible division to 50-50 problem. Let's say, after a long, expensive fight, the court lands on a number. They decide the business's growth during the marriage is worth $100 million. Under California law, Eric is now legally entitled to $50 million of that. So how does Jessica pay him? This is the catastrophic moment. A business isn't a checking account. You can't just write a check for $50 million when that value is tied up in inventory, intellectual property, and cash flow. She'd be staring down a few disastrous options. Option A, the buyout. She'd have to find $50 million in cash. For someone whose $200 million net worth is mostly tied up in that business, that's a monumental task. She'd have to drain her savings and sell off personal assets, or take out a massive loan that could choke the life out of her company. She already emptied her accounts once to buy it back. Doing it again might be impossible. Option B, the forced sale. If she can't raise the cash, a court could force her to sell off pieces of the company, maybe its most profitable lines or even its trademarks. Hacking up a business like that would destroy its value. Worse, she could be forced to sell a stake to an outside investor, sacrificing the 100% ownership she fought so hard for. She'd lose control all over again. Option C, the doomsday scenario, liquidation. In the absolute worst case, a judge could order the entire business to be sold off to the highest bidder, with the cash being split. That would be the end of her life's work. The Jessica Simpson collection would be gone, dismantled just to pay a divorce settlement. Step 4, the endless drain of spousal and child support. And it doesn't even stop there. With the huge difference in their incomes, Jessica would almost certainly be ordered to pay hefty spousal support. We're talking about payments designed to maintain their marital lifestyle, which could mean tens or even hundreds of thousands of dollars every single month for years. Add to that significant child support for their 3 kids, also based on her high income. These ongoing payments would be a constant drain, making it even harder to reinvest in the very business she's trying to save. When you combine a potential 9-figure buyout with massive support payments and millions in legal fees, you get a perfect financial storm, one that would be nearly impossible to survive. The empire would crumble, not because of a bad business decision, but because of one legal oversight. The lesson evolves, a cautionary tale for everyone. Jessica Simpson's hypothetical financial ruin is dramatic, sure, but the lesson here is universal. It's a powerful warning about protecting what you build, whether it's a huge brand or a small savings account. This isn't just a celebrity problem. When Amazon founder Jeff Bezos and Mackenzie Scott divorced without a prenup, the settlement was worth around $38 billion. Mel Gibson's no-prenup divorce in California famously cost him half of his estimated $850 million fortune. On the flip side, Kim Kardashian and Kanye West's detailed prenup reportedly helped them cleanly separate their billion-dollar empires. The takeaway is that a prenup isn't a sign of doubt, it's an act of financial clarity. It's a business plan for your marriage. It forces you to have honest talks about money before it becomes a weapon. It lets you set your own rules instead of having a court force its one-size-fits-all formula on you. For an entrepreneur like Jessica, whose entire identity and fortune are tied to her business, a prenup isn't just a good idea, it's absolutely essential. It draws a bright, clear line around the business, protecting it and preventing the kind of catastrophic scenario we've just described. You might not have a fashion empire, but the principle is the same. Do you own a small business? Have a 401k you've been building for years? Expecting an inheritance? Without a prenup, the growth of those assets during a marriage could be split down the middle in a divorce. Jessica Simpson's story is ultimately one of incredible resilience. She built a brand, lost it, and then fought with everything she had to win it back, securing her legacy for her children. Our trip through this hypothetical nightmare shows just how easily that could have all been wiped away. The community property law, while designed to be fair, can absolutely crush a business owner who isn't prepared. A $200 million fortune and an iconic American brand could be brought to its knees, not by the market, but by a legal blind spot. The reality is Jessica was smart enough to learn from her past. She put the protections in place. But her story is the perfect reminder that mixing business and marriage without clear legal rules is a massive gamble. It proves one simple truth. Sometimes the biggest financial decision you'll ever make isn't what you invest in, but how you prepare for when life doesn't go to plan. If you're obsessed with celebrity financial scandals like this $200 million disaster, hit that subscribe button because I expose the money secrets behind every A-list breakup. You won't find this level of financial detail anywhere else on YouTube. What do you think? Is a prenup an essential tool for a modern marriage, or is it an unromantic contract that just breeds distrust? Let us know in the comments below.